This is The Roadmap with Lee Heisman.
Hello, everyone, and welcome to The Roadmap, exclusively here on ASBN.com. I'm Lee Heisman, and every week we bring you some of the brightest entrepreneurs, CEOs, and business owners who are climbing the ladder, scaling their businesses, and thinking about one day how to exit stage left. We have a special guest today, all the way in from Chicago, Peter Dumon, the founder of the Harp Group. Thank you, Peter, for coming in.
Welcome, Lee. Thanks for having me.
Absolutely. Well, it was good to see you over at a Clifco event today.
Yes, always fun.
Absolutely. Yeah, it's always informative and always moving a million miles an hour.
I love that it's quick.
But here, we're going to slow it down just a little bit because I've spent time with you, and of course, and I want to learn more, but I want our audience to learn more about what you do. Talk about the Harp Group.
Sure. It's a real estate investment development and now management firm that I started in 1997. In that almost 3 decades, I've done about $800 million of real estate development, almost in the ballpark of $2.5 billion of acquisitions in a variety of asset classes. Really done everything but multifamily, but we're working on that now. But I'd say about 80% of what I've done in my career is hospitality related in some way, shape, or form. So either developing hotels, buying hotels, managing hotels of all different stripes, literally every type of lodging.
So, people, your reputation precedes you, as you know, throughout the Clifco Group, of course, and everybody sees the entrepreneur at their peak, right, where you have your success. But there's been challenges to get to where you are.
Yes, quite a few. Very first development that we did opened not too far in advance of 9/11, and it was at O'Hare Airport. So, that obviously had a major impact on the operations there that we were able to generally weather the storm. That also caused a cataclysmic shift in the capital markets. When performance declines, lenders don't want to fund new hotels, although we saw demand returning over time, and it takes time to build, plan, manage, get approval for a new asset. So at that time, we're working on 2 Westins in the Chicago area, one in the northern suburbs, one in the western suburbs. And the dynamic at that point in time was Cook County, where Chicago is, has extremely high real estate taxes. Lake County to the north, DuPage County to the west, lower taxes. Lots of corporate headquarters were in those areas because at that time, the CEOs tended to live in the suburbs, not in the city. So they put together a great search and find a corporate headquarters location 5 minutes from their house. There were no really nice hotels serving those constituencies. So at that time, Starwood Hotels had recently acquired Westin. There were only, I think, 70 Westins in the world at that point in time. Barry Sternlicht had an amazing, young, talented team, very aggressive. And so we saw Westin as a growth brand. Heavenly Bed, Heavenly Bath, guest satisfaction ratings were through the roof. So we did one in the western suburbs, one in the north. Both were successful. And we're basically off to the races at that point. We then followed that up with an intercontinental development near O'Hare, which was a beautiful hotel. The New York Times, which we did not do any PR because it was post-2008 crash. We opened actually 1 week before Lehman Brothers failed.
Oh my God.
Which, timing's everything.
Yeah.
So in 2009, a New York Times travel writer was stuck at O'Hare, happened to stay there, and wrote a really beautiful article that said it was the best airport hotel in the world. And I can assure you we had no budget for PR on that one. But, around that time, also had started a management company and began to manage hotels. And that also made it significantly easier for us to acquire hotels. So, 06, 07, started acquiring, and that has been pretty much our MO since that point in time. We've not done any new developments, despite looking. Chicago, the market, frankly, candidly, does not need another hotel room, and that's where we know the real estate the best. So I've looked in other markets around the country, but have never really gotten comfortable with development.
So going from development, like you said, you pivoted to managing hotels. Talk about that, how much insight it's given you into that target and acquisition model as well, how it plays back and forth.
We really pivoted to acquisition, but what sellers want in an acquisition is they want to engage with a known quantity, which we had a decent track record as developing these big, beautiful hotels, had good capital relationships, but we didn't have a management arm. So didn't want to waste time securing a third-party management contract, negotiating the management contract, while negotiating a purchase contract. So not having that in-house meant we were finishing second on a lot of acquisitions. Once we brought it in-house, we started succeeding. And then from a capital and investor perspective, they also wanted us to have control of the management. Effectively we're investing in us, not in the building, but in us as individuals with a vision for that building. They want you to have control over the day-to-day. And I thought that, very valid point, and it worked.
Well, I know a lot of PE, and we're going to talk about private equity and
Sure.
family offices. They bet on the jockey, right?
Mm-hmm.
A lot of people bet on the jockey, and I want you to talk about that, because I know the space of private equity very well. I know the space of family offices. Talk about your relationship with them and how it's evolved over time.
Initially, it was a lot of relationships, a lot of big firms, a lot of capital available. And I actually had a major Wall Street bank, because the hotels we were building were very successful and very beautiful, wanted us to go to China. And I had young kids at the time, and I said, I'm not spending 10 days a month in China and flying back and forth. I'm just not going to do it. It could have been extremely lucrative. So had those kinds of relationships. At peak, we were probably dealing with a half a dozen at any given time and talking to others. But their investment model from a private equity perspective is, buy, fix, sell. So you had to have a very identifiable problem with the hotel, whether that's physical, management, both. We typically saw both. How we're going to transform it. A lot of times that was in better food and beverage, more exciting food and beverage, because our large hotels that we developed, we put in killer food and beverage. You've got effectively great retail real estate, yet hotel restaurants were typically buried in the back of the hotel.
That's true.
Not very good food.
That's true.
We moved them facing forward, facing retail. So we're, the West and North Shore that I built, we created a partnership with a absolutely phenomenal chef, and we're a hotel restaurant in that corridor is maybe doing $1 million. We did 2 restaurants, and we were doing 10 million top line.
What? Wait, so it 10x'd
10x. And
from
then,
doing that.
And then had the North Shore of Chicago has a heavily Jewish population. We had an entirely separate banquet side. So tower in the middle, restaurants on the north side, conference on the south side. Conference had its own set of restaurants. Because of the Jewish population, I'm Catholic, we put in a kosher meat, kosher dairy kitchen in addition to the regular banquet kitchen, so we could get the bar mitzvah, bat mitzvah, and wedding business for the Jewish faith that was keeping kosher at those types of events.
So listening to your audience and the market there.
Correct. And when I had no idea that kosher meat and kosher dairy were different things, but I went and talked to a rabbi, and he said, no, we're going to have to I may butcher the pronunciation, rekosherize it every time we use it. I said, well,
did you say butcher the pronunciation?
Yes.
On purpose to talk about
No,
the
I
meats?
didn't.
Okay,
Pardon
that
the
was
pun.
well done.
But I said, well, why don't we just do both? And then we don't have to do that. And so you can do a meat event on a Friday and a dairy event on a Saturday. And it worked. It worked great.
It's amazing. And you said a key word, which I would love to know about. I'm sure our audience. You said you made the restaurants more exciting. I've never heard that word about a restaurant before.
Yeah, and actually, we were down here in Atlanta. In addition to the great chef, there was since been acquired by a larger architectural firm, a great design firm called Johnson Studio down here. And so I'd be on planes to Atlanta every other week for our 2-day design meetings, and wanted to make it fun. One of the fundamental mantras that I've always said is people will spend money in a place where they like to spend time. And so if you make the hotels places where people like to spend time, it's great. And then with those restaurants, I'll go ahead and say the name, but Allstate was headquartered in Northbrook at the time, very close to our hotel, notoriously cheap when it came to lodging. And I had many experts tell me there's no way you're ever going to get Allstate to stay at your hotel. And I said, well, I don't need them. I've got all these. I got those pharma firms. I've got Walgreens down the street. There's plenty of business to go around. And at the time, Allstate was paying a little bit below $100 at our competitors, and the average rate in the market on an annual basis is about 120. And I said, well, there's enough here, enough corporate demand that we can do 170. People thought I was nuts. Our first year, we did 170.
Wow.
And the dynamic with Allstate, what happened is they were staying at a Hilton product down the street. the Hilton shuttle van was dropping them off for dinner at our restaurants. And people are like, what are we doing at that hotel when this is amazing? And they went back to their bosses and said, why are we at this 30-year-old hotel? This one's brand new, it's better.
And the restaurant.
And it's better for us, and the restaurant's right there.
And this another subtlety, if our audience is listening closely, you relocated the restaurants to the front of the hotel. Is that correct?
Yeah, when you're building new, you have all the advantages. You can't really renovate. You can, it's just prohibitively expensive where the restaurant is located.
Oh, for the kitchen,
inside
the plumbing.
a full service hotel. You can't, the other thing we did is, made the rooms larger. The hotel in the western suburbs, we were in very early planning when 9/11 happened, ultimately changed the methodology of the financing to a municipal bond financing, which is very complex, took several years. But on that one, we worked with our design build firm, analyzed why is a hotel room 13 and a half feet wide? And it came down to that it was that wide because of the tube on the TV. So we did an analysis on a 500-room hotel, 16 stories tall. If we shrink the width of each hotel room, how much are we saving on glass and concrete to pay for a flat screen TV, which will be the coolest thing in the market?
Sure.
And that's when flat screen TVs were pushing $4,000.
Wow.
We ended up buying those flat screens, I think, at about 900 or 1,000 for the first ones, and obviously now they're significantly cheaper. But then you had a giant armoire that was blocking the view as you open the door in the room, makes a bigger room look smaller because the armoire holding the TV is blocking it. And then you can put in a bigger bathroom. I always put in a 9-foot ceiling because older hotels, you can never, ever renovate ceiling height. People that are staying in your hotel, better demographic at home, they've got 9-foot ceilings at a minimum. So we put in a 9-foot ceiling.
And it matters. It matters for the way you feel.
How you feel in the space. And if you feel good, you want to come back.
You're taking Maya Angelou. People don't remember what you say; they remember how you make them feel.
That's a great reference point.
It's an amazing. You have inside baseball information here for this, of course. Go back to the hotel rooms, for example. Does anybody really care how big they are? You want your bed, you just go in there to sleep, don't you?
Yes and no. You want all of the key components. So you want a great bed. So working with Weston at the time, the Heavenly Bed. Hoteliers, the big brands that would mandate what you put in really didn't care. Barry Sternlicht said, we're not selling a hotel room, we're selling sleep. Put in a great bed. Those are phenomenal. The bath, they want a really nice shower. Funny, the Westin at Yorktown Center in Lombard, Illinois, in the western suburbs, I wanted to put in almost all showers. And the brand came back to me and said, you can't do it. We need tubs. People are traveling with their kids, they might not have a tub. So you got to have a tub. Now, fast forward, the mandate is they're forcing us to spend millions of dollars taking tubs out of hotel rooms. And 75% of the rooms now have to be shower only. That same hotel, I went to the head of the brand at the time, Sue Brage, wonderful lady with incredible hospitality instinct and experience. And I said, Sue, all of these other hotels are really bad in this corridor. They're old. I said, we're building a category killer. And I said, they've still got their kind of legacy smoking rooms. And, it smells like smoke in the corridor outside those rooms. The carpet gets embedded with the smell. It stinks. I said, I want this hotel to be non-smoking completely. The smoking demographic is not as affluent as the non-smoking demographic. Let's make it non-smoking. I said, you got Heavenly Bed, you got Heavenly Bath. Let's call it Heavenly Air. By then,
wow.
So she called me several years later and she said, Pete, we're taking you up on your no smoking. By then, Barry Sternlicht had left running Starwood Hotels. He's got his private equity conglomerate now, Starwood Capital. So Barry was no longer the CEO. The new CEO really didn't like the Heavenly name because that was Barry's name. And I said, oh my God, Heavenly Air, that's awesome. And she said, well, no, we're not calling it that. I'm like, what are you calling it? And she said, the first hotel brand to go non-smoking. I'm like, very clever. To this day, nobody knows who the first hotel brand to go non-smoking is.
Wow.
Had they branded it, it could have been much better.
Could have been much better. Oh my gosh, Peter, this is amazing. First off, I could listen to you tell these stories forever. This is so intriguing. And I hesitate to ask the next question, but I have to, is where do you see the trends in the hotel, in the hospitality space? Because the reality is it feels like you're making the trends. Is that accurate? Forget where the trends are. It feels like you're every step ahead.
We've tried to be then in terms of development, just doing things, better and smarter than existing product. I think that's an obligation to your capital providers when you're doing that. It's an interesting business right now because you've had, Marriott bought Starwood, Hilton bought Promise Hotels years ago. So now the biggest brands, and now they all have soft brands. So there's not that many independent hotels. A lot of them are within the brand family. So the corporate traveler has always said, I'm a Marriott traveler, I'm a Hilton traveler, I'm an IHG traveler, because they want to get their points for the road warriors. They want to get their points in that system. And, it is nice. They can take their families on vacation. So I would say going back, close to 30 years, the gold standard brands within hospitality were Residence Inn and Courtyard. They just performed. If you wanted to, basically, buy an asset and clip coupons and have a ton of security from the brand platform, you could invest in a Courtyard, invest in a Residence Inn. Well, now all of these brand families, Marriott has over 40 brands in their system. I think Hilton's in the 30s, IHG's pushing 20. So, I like to say, somewhat jokingly, but if you do a focus study in the hospitality industry and say, pick a brand by, or Hyatt, pick a name of those brands. Within hospitality, you might get to 5%. If 5% of your own industry doesn't know what that name is, it's not a brand.
It's true.
And then in that same, going back to the Courtyard Residence Inn analogy, they've got, roughly another 9 or 10 brands that they're getting your data. And if the Courtyard's doing well, they've got 3 other brands can go in the same market. And your area protection almost universally does not protect you in that instance. So you're paying anywhere from 12 to 15% of your revenue to a brand family who is then taking that data and using it to compete with you. So I am, as an investor or developer, I'm very reluctant to invest in branded assets overall, whereas 30 years ago I was seeking that. So it's a very challenging market for operators now, because in a branded environment, because there's so many of them in the space.
Well, I know time flies when we're having fun.
Sure.
And before I ask about your future goals, I have to talk about Alaska. We have to talk about the trip recently where you get the breaching of the whales within 20 feet of you. Talk a little bit about what you did up there and how that happened.
Yeah. So I got a call from basically an intermediary broker in late 2019. Hey, would you ever look at a fishing lodge in Alaska? And I said, I'll look at anything, but we're pretty much financial buyers. If it makes sense, we'll be interested. If it doesn't make sense, and at that time with low interest rates, so many things we were looking at didn't make any sense. So we started talking, January, February, March of 2020. The gut pricing guidance that he was giving kind of made sense. And we had a meeting of the minds around a price, and that was in early March of 2020. And then 2 weeks later, the world shut down. So, I talked to the seller and I said, hey, if you're willing to stay committed to us, we'll stay committed to you. But your season, which had been very, very consistently profitable, going back, over a decade, your cash flow is likely going to 0 or negative if you're able to open it all this summer. And he went from about a 10 or 11 week season that year to 5. My wife and I went out in July and were able to see it. Both Waterfall Resort and Steamboat Bay Fishing Club, which were the 2 we ultimately acquired. I fell in love with them immediately. And I grew up in Michigan, and there's a little known salmon fishery in Lake Michigan and Lake Huron, also Lake Superior, but I'm not from the UP. So I'd grown up salmon fishing in the Great Lakes, loved it. So this was, we thought, a really good opportunity to, the product there was in need of renovation. We thought we could do better on sales and marketing, digital marketing in particular. They weren't using kind of the latest and greatest in revenue management modeling. And he had a great team, and he was ready to retire. So we ended up, closing the transaction. Ultimately, fast forward, it took until the fall of 2021 with all of the chaos of the COVID era. And we've now just finished our 3rd season. We're open Memorial Day to basically around Labor Day. So just shut down, and it's an amazing place to visit. And
if you're lucky, you can see orcas.
You'll see whales every day. You don't see the show that they put on in that particular video necessarily every day. Sometimes you see a lot more than that. Sometimes you'll see 4 at a time, just having a blast, and see who can make the biggest splash.
Amazing.
You'll see eagles every day, sea lions, otters. It's really cool to see nature there, unless there's a sea lion grabbing the back of your king salmon and ripping it away from your fishing line. I've got a great picture of the back half of a halibut after a sea lion grabbed the top. The line snapped and snagged the tail. So I was able to reel that in and create a great picture. It's the natural environment there is amazing. And I always tell people, even if the fishing on that particular day is a little soft, it's still, I mean, it's 10 hours on a boat and you want to stay out. You don't want to go in. It's just incredible. And the fishing is almost always spectacular. And we've got scale. We've got, between the two resorts, about 35 boats. I think our next closest competitor has 5 or 6. Wow. So we've got encrypted radios. Our guides share information for the most part, probably not as much as they should. But we know where the fish are. We've got the best guides in Alaska. They're the highest paid. And that's a big change I made sure that, not only on their tips, but on their base, that they were the highest paid in Alaska. Take care of them. They're with our guests 10 hours a day. They're front facing. They touch the guests more than anybody else. And then the guys and ladies that run the hospitality side are also phenomenal.
Well, Peter, I first, I can't thank you for sharing everything that you did in coming out. Secondly, you've sold me on that location. And thirdly, for guests out there that, number one, want to connect with you, want to check out your properties, and more importantly, even the Alaska location, which I now know I'm going to. I have no choice. Can you tell us how people would get in touch with you?
Yeah. Waterfall Resort is our larger lodge in Alaska that can accommodate 92 people at a time. We do a lot of corporate, a lot of leisure, a lot of incentive trips there. And that's waterfallresort.com. And Steamboat Bay Fishing Club is our higher end experience, 16 people in the lodge, 8-person in the residence. Each of those buildings has a private chef for breakfast and dinner. In both places, excellent meals on the boat during the day. And that is steamboatbay.com. And I would encourage everyone to check them out. Then we're also Steamboat Bay on Instagram and LinkedIn, and Waterfall Resort the same.
Peter, thank you so much. Ladies and gentlemen, first off, first class here. You already know it. Anything he does first class, I can tell. So I would definitely check that out. Peter Dumon from Chicago coming all the way in. Thank you so much. Ladies and gentlemen, thank you so much for joining us today. I hope the show was as insightful for you as it was for me. I know I'll be going to these locations next. We hope to see you again next week on another episode of The Roadmap.
Thanks for watching The Roadmap with Lee Heisman.